Hello, welcome to Insurance 101. I am Angela Keys, Chief Operations Officer for Renewal Financial Services. Insurance is a necessary commodity in today's society. Accidents occur, health issues arrive, and untimely deaths are common occurrences. What happens when your car is totaled and you don't have the resources to get it fixed? This is a good time for automobile insurance. Or if an unexpected fire or flood damages your home, how do you make it livable again? Consumers must have adequate insurance to provide protection from lawsuits or catastrophic events. Health insurance is one of the most important forms of insurance, yet increasing numbers of Americans are unable to afford this vital form of insurance. According to recent statistics, more than 47 million Americans do not have health insurance. This not only impacts the quality of health care received by these citizens, but it also costs society in general as well. Through this Insurance 101 course, Renewal's goal is to educate consumers about the various types of insurance to protect themselves, their loved ones, their property, and assets. Insurance is a form of risk management which is primarily used to hedge against the contingencies of life. It is defined as the equitable transfer of the risk of loss from one entity to another in exchange for a premium. An insurer is the company that provides the insurance. The insurance rate is a factor used to determine the amount, called a premium, that will be charged for a certain amount of insurance coverage. We will discuss a range of insurance products. This range includes automobile insurance, disability, health, life, property, and many others. Your insurance needs are based upon your age, profession, family needs, current expenses, future obligations, geographic residency, risk profile, and other factors as well. Now, there are 7 important insurance process basics. The first one is managing risk, the application process, underwriting process, issuing a policy, insurance premiums, claims, and renewals process. First, let's discuss managing risk. Risk is a fact of life. Insurance helps to ease the risk of life's realities, such as an untimely death, car accidents, an unexpected illness, residential flooding, and many other realities. Insurance helps individuals and organizations exchange the risk of loss for the certainty of smaller periodic premium payments. The exchange of risk is spelled out in an insurance policy, which is a legal contract that explains the terms of coverage, compensation, and other benefits. Insurance companies also scrutinize potential policyholders to determine their level of risk before underwriting a policy. Now let's look at the application process. After a consumer contacts an insurance agent or an insurance company, they must first complete an application. The consumer must understand 3 important factors when purchasing insurance. First, they must look at the type of coverage that is available or needed. They need to look at the premium cost and the benefit upon claims. The following basic information is required on any insurance application. The consumer will have to supply their city, state, address, telephone number, and other identifying address information. Personal information includes Social Security number, date of birth, driver's license numbers, gender, etc. They'll also need to request the type of insurance they will need, the coverage amount, if there are any beneficiaries, and other information. Finally, The application will ask for other information that is required for processing. Now let's look at the underwriting process. Insurance companies use underwriting to determine whom to insure and how much insurance they qualify for based on their risk. The underwriting process takes into consideration the insurance agent's recommendation, the amount of insurance requested, the policyholder's loss and insurance history, and the credit score and several other actuarial factors. The underwriting insurance company can choose to accept, deny, or accept the application with modifications. Those modifications, based on state law, can require higher deductibles, credit limits, premium changes, or endorsement coverage changes. Issuing a policy. If the policyholder and underwriter agree on the insurance, a policy is sent. Policies include the declarations page, which includes information about the policyholder or holders, exposures, and coverage. It also includes the issuing agreement, where the insurer promises to pay the covered losses for the policyholder. It includes modifications, which eliminate coverage for certain property or situations, and it also includes endorsements, which change, add, and subtract coverage to the insurance policy to tailor the insurance to fit the insured's needs. It's important to remember that policyholders are responsible for reading the policy and making sure that the coverage meets their needs and is what they requested. Policyholders must then pay the premium based on the arrangements which have already been agreed upon. Now, let's look at the insurance premium. The premium is the actual amount of money that the insurance company charges for insuring a policyholder for active coverage. Premiums are based on the consumer's application, the level of risk, and other factors. It's also based on statistical risk calculations, not only a consumer's individual activities, habits, and past history. Premiums can vary widely among insurance companies. Therefore, it's important to shop around and get several quotes before committing to a certain policy. Remember, the least expensive premium may not provide the coverage you need, so make sure cost is not the only factor when considering a policy. Make sure you get the adequate insurance coverage you need for your lifestyle. Let's look at the claims process. Policyholders have accidents or receive health services or perform an activity that requires the insurance company to make payments based on the purchase of insurance. Policyholders usually have to file an insurance claim before any money can be disbursed for services. The insurance company may or may not approve the claim based on its own assessment of the circumstances. There are two forms of insurance claims: property and liability. In property claims, the policyholder reports the loss or files a claim. The insurance adjuster investigates the loss to verify the risk coverage and to determine whether a policy is in force and prepares a repair estimate. In a liability claim, a third party makes a claim alleging that the policyholder is responsible for damage to the claimant. The insurance company's claims adjuster will assess the claim, verify insurance coverage, interview the policyholder, claimant, and others to determine the extent of injuries and/or any negligence. Adjusters will either then make payment for the claim or deny the claim. Finally, let's look at the renewal process for insurance. Most insurance policies provide coverage for terms of either 6 or 12 months. Policyholders can choose to cancel their policy or renew it at the end of this period. The insurance company can decide to non-renew a policy if the policyholder has had an unacceptable number of claims, sometimes as few as one. The policy can be canceled during the policy period for non-payment of premium or other specific reasons. State laws place restrictions on the ability of insurance companies to cancel or non-renew, and they must provide advance notice to policyholders. Congratulations! You've just completed Renewal Insurance 101 online course. If you are ready to be tested on your insurance knowledge, click the link below to be routed to the examination. If you wish to take the test at a later time, please log in later using your secure user identification name and password. I'm Angela Keys with Renewal Financial Services. Thank you for your time.